Good morning, everyone. Welcome to Admiral Markets. This is a live webinar on strategy today, looking, of course, at technical analysis on the charts, such as Forex pairs, commodities, and stock indices. My name is Chris. Thanks for joining, and we're going to take a look in just a second. Be aware, though, first of all, that the webinar is shown and broadcasted to a global audience. May not be suitable for everyone, though. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more about that. Also, please be aware that trading for exchange and global financial markets is considered high risk, may also not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer, and you are also aware of the risk involved when trading. All right, thank you for your attention on that. So, I hope you had some good trading yesterday. Today, we have some news events on the German consumer confidence and business climate. We have some lighter green and yellow tagged events as well. We have a red tagged event in the shape of a Bank of Canada interest rate decision. It's expected to stay on 0.5%. All right, so let's take a look at the charts now. And I'm looking forward to take a look at the strategy focus of today, which is going to be combining the Alligator, an indicator made by Bill Williams, Fractals, an indicator by Bill Williams, and the Awesome Oscillator as a supporting tool. That would not really be that important, but it will be still here at the bottom. So some couple of things from Bill Williams, as you can see. And you can find that easily by going to indicators. I guess this is insert, or just go to I'm not sure, this is Czech, so I don't know what it would be in English, but probably indicators, insert, I guess, and then go to Bill Williams, and you'll find Fractals, Alligator, and Awesome Oscillator right there. Okay, so you can copy what I have. You can make it, save a template, and you would have then right away the same. You can apply to multiple charts by making a template. Good morning, Avaldas. Good to see you and everyone else here. So this is the template I'm going to use. First, I want to just do some analysis with you, take a look at what's going on. Then I want to talk about the pattern trades that we had yesterday. And then I want to show you and talk about this particular setup using fibs and the Alligator. So your dollar, we talked about the potential for a break yesterday. And I had some hesitation about that particular candle yesterday because the trend line didn't fully, or the candle didn't fully break through the trend line. Do you remember that? Like this. So there was a bit of a hesitation indeed with the break. You can see there was a bit of a sideways pattern, but that's actually good. All right. So maybe I'll just mix it all together right away and talk about today and yesterday. That's actually good because a pattern, if you get a bear flag below the break, that's exactly what I was looking for in the pound and the dollar yen, remember? And it happened in the euro. That's actually showing that a break is looking good. That's actually confirming that a breakout has a good chance. So if we then zoom into the 5-minute chart, you can see that there was a pretty good bear flag below this candle break. All right, you see it right here. And we can use this channel lines like this. All right, and eventually it turned into a triangle as well. So it was a bear flag, then it became a triangle. In any case, both patterns broke. And anyone taking shorts upon the break or even upon the weakness here did a great job, and you managed to pull out some pips towards the 111.25 area. All right, so hopefully you got out close to that or around that as the market died down after London closed, right? It could have been a setup potentially yesterday. That was a break basically of a triangle or a bear flag, depends how you look at it. All right, so basically that 5-minute bear flag was right in here in this little zone right there. And that was a smaller pattern after the bigger pattern break we discussed all yesterday. Now at this moment, I'm actually expecting a follow through on that Let's get rid of all these trend lines. That was a pattern trade yesterday. Now we're going to talk a bit more about fibs and alligators. As you can see on this hourly chart, we're making clearly lower lows, lower highs. So from this perspective, I think this could still be a pullback. Now, there's one thing that we have to be aware of, is that there is, in essence, at least single divergence, if not double divergence, as you can see here. So that makes fib trading a bit more riskier, obviously. But in essence, when looking at the alligator, it's still pretty good bearish, obviously, as everything is aligned here. We have a clear trend as well. So if we start fibbing from fractal to fractal, all right, and I'll explain that in a bit more detail later on, but if we use the most recent fractals right here, like this, and then zoom into the hourly, on the 4-hour chart, this is the fib we have. And I would expect the price to be able to turn at around the 38.2 fib or the 50 at around 111.75, 111.90, 112 max, 111.50 to 112 for a turnaround to push down to 111. All right, so I'm expecting this. So I think it could be an interesting trade to look around 111.75. Not 111.50, excuse me, 111.75 up to 112, down to 111. That could be, I would say, probably after this, if this trade does take place, then there will be like double or triple divergence, and then I think there could be a bigger correction on the euro dollar. In fact, in that case, we might see a bigger correction even, well, let's say of this swing high, swing low. All right, and price could go up to 112.50, even 113 perhaps. So this is what I'm expecting for today. Up, down. All right, not today, because that would be a bit too much price action for only one day. But let's say that the upcoming days and perhaps next week, right? So something like that. You see that? And then price could again fall. So this is what I think is the path of least resistance. This is, if I had to make an estimate at this point, this is how I would think price is going to move based on support and resistance, on momentum trend, and wave patterns, basically, right? So what is an interesting trade for today or later this week? It's that short, I think, I just talked about, or maybe even a bounce at 111. But that's a counter trend trade, of course. So with the trend trade for the moment is a bounce in this zone. You got a small supply demand zone in here as well, by the way, which is extra resistance. Let's take a look. The top of that zone is 111.88. The bottom is 111.70. That's an extra reason for price to turn. They got bottoms here as well again. There's all extra resistance. There's all extra confluence to see a turn. Now let me put back that fib, by the way, to its original spot, because I moved it. There we go. All right. What if we get huge momentum to the upside here? What if we get one massive bar that pushes all the way to the 50 fib? Then I'm definitely not looking. I mean, I could still be looking for shorts, but I'm not. I'm waiting. I'm waiting to at least have a break of that candle high. That's a big momentum candle. It's a very high chance it's going to break this candle high. I'm waiting for lower time frames, right? Because I want to see basically some exhaustion. I would like to see a counter momentum a bit and a hook back as a weakness that doesn't break the high. So I'm basically looking for a bit of price action, a bit of a candlestick pattern there, a bounce at those fibs. If there's a lot of momentum riding up here, you never know how far it could push. I don't want to short against that momentum. I'd rather wait for momentum to die down, make a bit of a regression, a bit of a move against that momentum, hook back, and then look for the weakness. Because what if price starts to just really build on the momentum to the upside, and it breaks through the 112. If it breaks through the 112, I'm not looking for shorts anymore. The whole trade idea is invalidated, and I would be neutral, and I'm just going to reevaluate it, reanalyze it. I'm not trading it for shorts anymore. I mean, I would totally look at it again, and this specific trade idea, what I'm looking at, is out of the window. That's how I look at it. All right, so 112 is key. If this counter trend momentum pushes above 112, the idea is not valid. What if price doesn't get up there? What if price, it doesn't get up to 111.75 or 112 or in between? Well, in that case, 23.6 fib is a turning spot. It's a shallow fib, so it's not a fib I like to trade. And then I would be looking for breakout trades. So breakout trades are best actually by trading patterns. Now today's focus is on Fibonacci. Yesterday we talked about patterns, right? But if price doesn't get up to the fib, then I'm going to fall back on pattern trading. Then I would like to see basically a pattern break. Let's see if we can find a pattern, first of all. And it's a bit difficult. We could say maybe on this 50-minute chart that we're building a bear flag. That's already quite a low time frame. So if it's a 15-minute chart, I would need to zoom into the 5-minute chart. I would need to see a break of the bear flag. I would need to see a smaller 5-minute bear flag below 111.30, and then a continuation. But in all honesty, the target is 111. So we're really looking at a very tight space. We'd have to break below 111.30, bounce at 111.20, hook back to 30, and we have space to 111. So, well, yeah, that's not very, very interesting. It's a very, very tight space there. So probably not. All right, Pound USD. Pound USD we talked about yesterday. Did anyone take any setups yesterday? Did you take the Pound USD specifically and the dollar yen? Because we talked about those setups and they worked out nicely. We got the break of this trend line, resistance trend line. We talked about the potential ABC rally that could happen. A, the wave pattern yesterday. B, C, and that we're looking for a break of this trend line with a good hour candle. So what do we have here? Was this a good signal? Let's talk it through here to get a bit of feedback from you. Was this a good hourly breakout candle? And I'll draw the trend line in various ways. It's the same. All right, we got one Y for yes. Anyone else? We're talking about this candle, just in case you're multitasking. The candle 1 to the right of this green line. Yeah, it isn't too difficult, right? Ergo. But I'm still asking because I want to see your opinion. But this one should be a very fast one. Indeed. Edith and Ergo are correct. Hamed says we need to check in lower time frames. Actually, this is a good breakout. So Edith and Ergo are correct. Hamid, there's nothing wrong with going to a lower time frame, but actually this is a good breakout candle. I'll tell you why. Because the candle is a good size for an hourly. It's 65 pips. It's not some smaller candle like this with 5 pips size. As long as it's a decent size compared to the average, and you don't have to do that very mathematically. You can just do that with your eye and compare it to the most recent candles. That's a good size candle. Furthermore, it's a close very near the high. We're talking about a very small wick. If we want to make a percentage, the wick only, the close between the high, it's 6.5 pips. The entire candle is 70 pips. So it's less than 10%. It's about 8.5% wick. Anything below 10 is extremely small. Anything below 20 is good. Anything below 30 is okay. So that's an excellent candle close. Furthermore, the candle is fully above this trend line. It's not like this, just inching above the trend line. No, it's more than half of the candle is above the trend line. So that's all these three things make it a great breakout candle. So that was the first thing I said yesterday. This is probably going to be an ABC, but we would like to, before trading it, get the confirmation of a good breakout candle. So we got that. Then we were saying that this is a triangle, I think, or a channel at least, at the very least. So look at the 5-minute chart for the pattern after the pattern. All right, so when we're looking at this, here's the breakout occurring. And did we get a pattern after the pattern? Yes, we did. Now it almost seemed, difficult to believe when this was happening, I guess, for maybe some of you at least, right? That some momentum could stop, could make a pause, but it did. It made a bull flag. That's exactly the bull flag I was talking about. A small pattern after the bigger pattern. Anyone trading this bull flag, the break, by putting a pending order above it, or, well, that could be maybe not a good idea because probably, if I remember correctly, it was a news event. I'm not sure about that anymore. But anyhow, or just taking a market order right there did very well, as you can see, right? And price really pushed up a lot. There was actually also an inverted head and shoulders right there. Another pattern, two patterns after the big pattern break here. So it played out exactly as we were discussing the trade plan yesterday. So I was very happy with that. So did anyone take that trade? Now, if you didn't, don't worry. I mean, I don't want to, I'm not asking to, to say you should have. Obviously, this is your risk to take, your trades to take. It's all your decision. So anyone who didn't, that's fine. I'm just curious for myself if anyone did take that trade. If not, no problem. You can see now that it was a good setup and it really rocked for another 100 pips. Right? Another momentum, another triangle, another momentum, another flag, another break. But as the breaks continued, you can see that the flag started to become bigger and that the breaks up started to slow down, creating a bit of divergence. So obviously that momentum is going to weaken. And you can see the angle starts to shift. This was very fast. This was very fast. This is slowing. This is slowing. This is slowing. And you see that the angle is kind of going like this, right? And there's divergence between these stops. And then you get the stop of that move up. Now the target, in my opinion, Hamid was talking about a reversal signal. The target was the 61.8 fib in my view, right? At the very minimum. Now it went a bit higher than that. It actually stopped at the 78.6 fib. And it went up to the 88.6 fib after that. All right. Now, maybe Hamid was looking at the 50 for a reversal, but the thing is, as discussed in last week's support of resistance webinar, if you have such a strong momentum candle in front of a fib like that, the momentum is probably going to win. The fib is not strong enough, most likely, against such a momentum candle. The momentum first has to be completed. It first has to finish before resistance could probably become more important. When you get a momentum candle like that, there's a very high chance of getting to the 61.8, and you can see it actually went even further than that. 78.6 had some pause, but it went up all the way to the 88.6 fib. So that was a great breakout trade. But what about now? Well, at this point, we actually see weakness. We see price moving down a bit like this, then popping up here. So we see a head and shoulders pattern, right? We see a pin bar indicating the potential for head and shoulders. And we see as price rallied, the exhaustion, the inability for price to break this top. It's also at a strong fib level. So I do think that when considering the resistance that we do see up in here, I think there is a good chance of price making a downside today on the pound USD, despite the big momentum to the upside. Now that resistance, I think, is strong, and I do agree. I think that Ergo has a good point about the potential for today downside. All right. Now, there's one thing that worries me is this strong daily candle. So downside, from this point of view, could be okay, but I would be hesitant to aim very far. All in all, the price is still very much in a triangle like this. All right. So from this point of view, although we had good momentum here, and this could have been a correction, it's considering the triangle, it could really go both ways. And here's even the smaller triangle. So from this point of view, I was very bearish after this fall, and especially after the zigzag here, the turn here. But at this moment, I have to just conclude, I think there's no other way to say that this is hanging in the air, and it could go really both ways. And considering the strong, what did I say about strong daily candles, or strong candles in general? So this is a strong candle. So that is huge momentum. And although we can see a retracement to the downside, it could find support to break this trend line. So from that point of view, I'm going to take this fib off. And I'm going to put a fib on this swing high, swing low. Okay. Now the reason is that this, although I was thinking this would be an ABC, the C really had a lot of momentum, a lot of upside power. So that could make it a 1, 2, 3, and this a 4 potential as well. So therefore, I would like to put a fib from here to here. And we have to realize that these fibs could be bouncing spots and could be turning spots, actually. So from this perspective, the pound is not that interesting. It's not interesting to trade long because there's so strong resistance. The only way I would trade a long is if it breaks and shows a smaller pattern here. And then I'll take the break again. That's the only way I would be able to trade long. Shorts are risky because we're trading against such a big momentum. I would need price basically to show downside momentum. Preferably going down all the way to the 61.8 fib. Then to show a bear flag. And then a continuation or a break of that bear flag. Or in other words, before I trade this, I need to see a clear bullish or bearish momentum before I even think about trading this. The facts that I see are too contradictory. I see momentum both ways. I see support and resistance everywhere. It's a triangle. And, from this point of view, I would need the price to break above the triangle, hook back for a long trade, or I need to see some evidence that price is using this resistance, and I need a hook back for a fall down to the bottom of that triangle. Dollar yen. All right, dollar yen, as we said yesterday, had a triangle right in here. I'll make this very quick. I don't want to annoy you with too many recaps. of previous trades, but the dollar yen will be the last one, I promise. We had a break, we had a bounce off the 38.2 fib, we had a break of this trend line, and we had a triangle. So we said if we break that triangle, there's a good chance of a breakout continuation. So we need a good hourly close. And just like the pound USD, this is a good hourly close, and we'd like to see a pattern after that. A pattern after the pattern. All right, so did we get the pattern? Yes, we did. Right in here, we had a flag or a triangle, doesn't matter. So anyone taking a trade right there did great. Price moved up and up and up and up and continued to push. And that was a great setup as well. So all those pattern trades worked out perfectly, these two. Now, at this moment, going back to the 4-hour chart, all right, there we go. At this moment, price is either in a wave 5 to the upside or is going to make a bigger correction to the downside. So the current fib I'm using is this one right here. And no, that doesn't add up. Okay. Not sure why I put the stop loss there. I would probably now rather put it below the 50 fib. I put it below the 38.2 fib, but okay. Well, anyhow, I put the stop loss below the 38.2 fib. That because if this is a breakout, well, this has been a breakout, but I mean, if this does get a continuation, it shouldn't go below the 38.2 fib, and that should be a bouncing spot for continuation up to 111. All right. So this is a different trade again. This is basically trading a bounce at the fibs, and this is the fib I'm currently having on the chart, and I'm looking for a bounce at the 38.2 fib. I actually took a trade already, as you can see. That's because I saw some hesitation here for price to get down to that fib, and I already anticipated a turn at now, actually, due to the fact that it's taking too much time to get this to this fib. All right, so I'm taking a 23.6 fib instead, with a stop loss below the 38.2 fib, trading away 4 at this moment. Now the target, if we zoom back out to the 4-hour chart, and if this is a 1, 2, 3, 4, 5 within 5, that's a green 5, this is a blue 5. Then I think there's a good chance of price to get up to 111.70. All right, but that's a pretty high target. For the moment, I'll probably be aiming for 111 because there is a big resistance zone on the left here. You see that zone right there? All right, so that's the zone to be worried about. All right, so if I had to put a target, a TP, I think I would put it for the moment at 111. Let's see, 111.68. But that might not be the target I wait for, right? That would be great if it works out at that spot. That would be 170 pips profit, 168 versus about 15 risk. So that would be about 11 to 1 trade. Now, would that work out? Maybe. It only has to work out 1 in 10 times for it actually to be a long-term profitable trade, ironically, because it's such a great R2R. But the thing is, I might not hang to that target, right? If price starts to push up, hopefully it does, and it starts to push up, and I see weakness at around 111, then I'll take a market exit and grab the 100 pips profit instead of the 168. So it's a target to take profit that I have just in case market really accelerates, really starts to push up to that target quickly. Great. But if it doesn't, and the market doesn't push as fast, starts to slow down, so struggles around 111, then 111.25, I might exit at 110.75 then, or at 111, right? And take those lesser pips. That's great too. So it's a take profit, but it's a flexible take profit. It's not, I'm not hanging in there, do or die. That's the best case scenario. And if it doesn't get there, and there's reason and evidence to show that shows me that there's going to be a bit more slowdown, then I'm happy with less pips. All right, so that's basically, I think that, as you can imagine, the dollar yen seems the most interesting to me, and the euro dollar second, if price gets up to that resistance zone, and the pound the least from my perspective, because we need to see some. I would like to see some directional movement first. All right, so that's the quick recap. I would say the quick recap are the three majors for today, and a bit longer recap of yesterday's setup. Yeah, dollar CAD. Dollar CAD. I think I made a underestimation of. I was hesitating whether it's an if it's a rising wedge or if it's an ascending wedge. And I said it's kind of in between because rising wedges are typically a bit more like this, right? But yeah, it maybe underestimated that. It did show struggle and it didn't really push through. So I wish in retrospect I was a bit more, a bit more cautious about the formation yesterday. And in retrospect, I don't know, but it didn't really break actually, because the hourly, according to my own breakout rules at least, and I didn't talk about that, unfortunately, on the dollar CAD yesterday, which is a pity. Sorry for that. But if you look at the breakout rules here, you can see that the candle close was really good, but the breakout of the candle, right, the majority of the candle was below it. Only a small little part of that candle really pushed above the trend line. That was not really a breakout candle. So, and it failed to break actually. Yesterday I was talking about a breakout, and I don't know why, because it was not a breakout candle. And it failed actually, bounced off that level. But I did say, if it fails, it could be a good space to the downside. It did make a strong move up, and it looks like it's making an ABC. And I would expect price to find support somewhere for a rally up again. All right. Now, that could be this level, but it could also be a bit lower at the 38.2 fib at 130.50. So at this moment, I would say price is in a descending wedge. So there's a chance that price can make the break. It could probably make a bit of a rally, maybe hit this resistance, then turn, and then break, and then turn again. Now, if it doesn't break the bottom, then alternatively, if it shows good momentum and then breaks this trend line, then it might not get here, and it probably will turn into 23.6 fib and show a breakout trade. In that case, I'll be looking for a break, small pattern, and another breakout right in here. So that's my battle plan, either the fib or the breakout. All right, so what about the alligator and the fibs? So what I like to do here, what I would use for this is fractals. Fractals are good because it's easy to place fibs with fractals. If we start to look, for instance, for the euro dollar 4-hour chart, it's good to have 4-hour fibs, I think, because they're very sturdy and they tend to be very robust. They tend to be strong. You don't get many breaks. Now, what I like to see with fibbing 4-hour chart is basically the moving averages to be aligned. As you know, I like to use 21 EMA and 144 EMA. But it could also be easy to use the alligator as a replacement. It's one indicator, and you have 3 levels in one shot, plus you see alignment if there's a downtrend. So as soon as you have alignment, I think, most cases, it's ready for fibbing to the downside. So after this green line, you can see price is ready to place fibs to the downside. So when looking for the most recent fib, I'm looking for price basically to, I'm looking for a fib between fractals. Right, so here we go. Here, as you can see, two fractals. All right, and I'm looking for price then basically you can see respective to 61.8. So if you're not sure which fractals to use, start at the top, draw the fib to the very first fractal, and see where price stops. It stops at the 38.2 fib. Wait for the bottom to be broken before fibbing again. So here we see the bottom broken decently, so we can move the fib from this fractal to the next fractal. All right, and from this point of view, we would do that because the moving averages are aligned. Right, so we can see 61.8 fib. So anyone trading this 4-hour fib could be zooming into lower time frames and looking for basically exhaustion, turnaround signals on lower time frames at the 61.8. That's the whole idea. So the next fib would be upon the break of this bottom. All right, so when we hit the 272 target, one could, especially if it's a deep fib, we could already start moving the fib from here to here. And you can see again 61.8 fib hit. So we can do the same again when we get the break of the bottom. A 38.2 fib. Once we break the bottom here, we can fib it again. Like this. Or like this. All right. There we go. So, especially with deep fibs, it's okay to move the fib after bottom break. If you get a very shallow fib, like the 23.6, and then you get a bottom break, then do not move it. It's better not to move it right away, because what can happen is you can have something like this, and if you start to move the fib from the 23.6 to the new bottom, then often price actually makes one more rebound up to the 38.2 fib before falling again. So if you start to put the fib on the smaller swing high, swing low, you'll get stop loss. Your stop loss will get hit. So what you want to avoid is putting a fib on a very shallow fib like the 23.6 fib. Now a 38.2 fib is okayish. This fib particularly right here could be a bit doubtful because price just broke it, the bottom. But putting a fib from the 38.2 fib all the way here is okay because price has extensively broken that bottom. So the point is that if with 23.6 fib, don't move the fib. With 38.2 fib, see if it can get down to the minus 61.8 target. If it does, then move the fib. If it hits the 50, the 61, 78, or 88.6 fib, it's fine to use that as a new high upon the bottom break. So is this clear? What I mean with moving the fib depending on which Fibonacci level gets hit. If not, let me know. Or you can ask me a question and we can dive into that a bit in a different way. All right, ergo, it's all clear for ergo, luckily. So at this moment, let me move on then. So we had a 38.2 fib, and we reached the minus 272 target. All right, so I mean, is it okay to move it? It's a mixture. It's a gray area, in my opinion, really. If yes, then we'll probably see some fibs down in here. If not, then this target is still open. So if not, this is actually more of a breakout territory down to that target, down to 110.75. If yes, we could use this. We can use this fib, as I had earlier today. And in that case, you can see 272 target at 111, and you see the fibs that make the most sense. And this is the fib I already talked about just a while ago. Now, from a discretionary point of view, I think that fib makes sense. From a wave perspective, actually, this fib would probably be better. And price should not, in this case, let's see, should not break above 111.80 probably. This should be the turning spot at the max. All right, so that's basically waiting for the alligator to be aligned and then taking trades. Let's take a look again on the pound with a different perspective here, and we can take a look at other pairs too. Let's see, there we go. Well, it's a mixture here, I think. If anything, the alligator is open now to the upside. So from this perspective, we should be putting a fib from here to here. But is there a good trend? I don't think so. Dollar yen. All right, there we go. This is actually the current 4-hour fib. As you can see, we trace back to the 61.8 fib when using the alligator at least. All right, and you can see a bounce off that level. So we were looking for a break of this high before fibbing again. All right, let's take a look at Aussie. This is a good trend. You can see alligator neatly aligned. So what are we looking for? Well, if we're now looking for the most current fib. So if you have any doubts, you can always start at the top here and start fibbing these downsides to see what the most current fib is. Now that might take some time, so we'll skip part of that process, but basically you can quickly see how many of these fibs work nicely. Here we go. All right, so we got a 38.2 fib. We had a break of the bottom here, but it was a doji. All right, so I wouldn't move the fib anymore because at this point, I mean, we didn't go all too far. We broke the bottom just barely, and I wouldn't use this swing high, swing low for a fib. So I think that this is the fib. If it reaches 70 it could be a resistance. It's 50 fib. But it's more of a breakout territory because of the fact that at this point, price is retracing like this, and it might not get to the 50, but it's not worth trading. It's not worth putting a fib from here to here, in my opinion, as yet. Now, an hourly chart, that could be a bit different, right? Because, but yeah, I think the 4-hour fibs are always the most sturdiest. But if we were to use a 1-hour fib, then I would say it's probably fair to use this fib at this moment. And we just had an 88.6 fib bounce. All right. So if an engulfing twin like this would hold, probably 88.6 fib is a turning spot. But I think the pattern is still what makes the most sense in this case would be the break of this this flag. All right, or hook back on a 5-minute chart. If price bounces at this channel, makes a hook back like this, there could be a head and shoulders here for weakness. That makes sense too. All right, so the break of this flag or a pullback basically to square up this engulfing twins for more downside. So yeah, this is not the best example. I would have loved to give you an example on the Aussie that would have been a fib trade, but sometimes fib trading, yeah, sometimes you have a fib trade, sometimes price has moved away from a fib and it's going to target. And in that case, I prefer breakout trading. You can still use fibs, but just realize that it's not as strong as this fib is. All right. So let's see if we can find a different example, maybe. All right. Maybe the pound odd is different. We can see many of these upside fibs working very well. I mean, just to give you an example here we had a breakout. And you see how nice the fractals are. It just makes it easier to place a fib. 38.2 fib hit, right? And then we see a continuation. .26 fib hit right there, or 38.2 like this. Alrighty. 38.2 fib yesterday as it bounced and broke to the upside. And basically, we had a triangle at the 38.2 fib, the break of the triangle, and we got that big upside yesterday. Right there. Now at this point, unfortunately, it's not much better. All right, this 4-hour basically fib has already bounced, and we're waiting for a continuation now. But in this case, I think it does make sense to look at the hourly and say, okay, this is a good breakout, this is a good momentum, and to place a fib on this breakout and look for a bounce at these fibs. I do think that this, in this case, is a pretty good break, pullback, continue. So from that perspective, I wouldn't mind using this smaller fib on the smaller time frame on an hourly, and you can see the price hit the 50 already. I think that price is at resistance at this point, and we can see that pretty clearly like this. Alrighty. But in the channel to the downside. So I think there's a good chance that price could bounce here, make a bit of a retracement, and we could see the same head and shoulders, but the opposite direction, inverted head and shoulders. And I think that could be a good bounce right down here with the green circle for head and shoulders after a 50 fib bounce for upside as a continuation of the 4-hour breakout after the 38.2 fib bounce, right? 38.2 fib bounce. Right here, breakout, pullback, continuation. So if we see a good hourly candle like this, closing, then we might see a bit of retracement due to the resistance, but an hourly candle suggests, such a strong hourly candle suggests a continuation of the momentum. So after it retraces about halfway or lower, I would expect support and a follow through. So I think that could be a good trade. It's kind of like a fib trade. I mean, it's not the 50 fib would have been a direct fib trade. This is kind of trading the reaction to the 50 fib, but it's also on the basis of the fib, so that's good. Alrighty, let's see. Pound yen, euro yen are a bit of a mixed bag. We talked about upside already earlier last week, I think, about here. That upside happened, then we got a good correction, then we had an upside again yesterday. All in all, this is moving up as expected, but it's quite choppy. There's deep moves to the upside, downside, sorry. So there's a strong resistance level right here. All in all, quite a tough environment. Big triangle. So if I look at the 4-hour alligator, then we would put a fib from here to here, see where the targets are. And we can see that price went down to the 38.2 fib. Look at that. This is interesting. 38.2 fib. Broke the top. then moved all the way down to the 50 fib. Now, do you see why I'm careful with fibbing from here to here? If we only fib from fractal to fractal, we would have the stop loss below here, fib from fractal to fractal, and see price go below our red line, go below the fractal, take out the stop loss, hit the 50 fib, and turn back up again. So that's why fractals are great and an easy tool to use for placing fibs, because we see where the swing highs and swing lows are, but I'm not going to use every one of them. In this case, because we just broke the top by a bit, I'm keeping this fib, and you can see why. 38.2 fib, 50 fib. Now on the hourly chart, we might have chosen to fib from here to here, like we did on the pound odd. If you do so, that's why it's also so important to realize that that is a weaker fib. That is a fib that might not hold, and that is a fib where you need confirmation before trading, because otherwise it could just break it and go to the lower fib. So after the fib rally, we had to move up to the 272 target, and then I would be inclined to move it, because first of all, we hit the target. Second of all, we had a fib, the 50 fib, which is a deeper fib. So once we hit the 50 or deeper, I'm more inclined to move that fib, especially if it hits the target. So what do we see then? We see price hit the 61.8 fib, move up to the 61.8 target. So the next fib we can put on is from here to here, and we see a very deep fib, a 78.6 fib. So price is still in that mode. Price is still bouncing off that fib, and it would have to go up to the target before I could actually move that fib from here to there. So now we're kind of in the middle. And the price would have to break, pull back, and continue for potential to take a breakout to that target. All right, Euro Yen. It's a bit of a mixed bag here at the moment. I mean, if you look at this huge candle, let's take a look at that fib. 23.6 fib hit, as you can see. So once it hit the target, we would not put the fib from here to here. Even if we fib it like this, let's see. Then we see that we had a 38.2 fib, but that we didn't break the bottom all too much. So we wouldn't move the fib. So this is still the main bearish fib. That's my point. 61.8 fib pounds. So from this perspective, we're still in the bearish mode. Now in the meantime, we've had some upside as well. And we've actually had alignment to the upside already. And you can see we're still actually respecting the 61.8 fib here. We respected the 23.6, we respected the 50 fib, and the 61.8 fib here. The reason why I have this fib is that's the first swing high, swing low, really. And price never got here it went above the top, but it didn't retrace to a deep fib. So we would really need to break above, let's see, above this trend line before I can move the fib again. All in all, this is a big triangle. Well, I guess we could have seen that right away. But okay, it's a lengthy explanation. For this to be a zigzag to the upside, to go up to the minus 61.8 target at 125, we need to break above this trend line. For this to be a continuation of downside, like this, we need to break below this trend line. So to recap, basically, fractal to fractal, as long as the alligator is aligned to is showing trends by showing good momentum like this, good space between those moving averages, we can use fractal to fractal. As long as we can move the fractal, we can move the fib from another fractal to another fractal, as long as price retraces deep and or hit the target, and or hit the broke the bottom. All right, as I explained already. I think the 4 hours is the sturdiest, but the principle can be used on all. It can be also, on the hourly chart. It's just that it would be a bit weaker, I think, but it's possible. On this Kiwi, for instance, if we were to trade an hourly fib at this moment, the fib would be just like the Aussie, would be from here to here. If there's divergence, of course, be careful that there could be, on this oscillator, there could be a bigger pullback. Fibbing, when there's divergence, is always riskier, especially if it's double or more. But even a single on a 4 hour chart is risky. It could be even used on a 50-minute chart. Let's take a look. A 4 hour chart is always a good place to start because of the fact that it's a slow time frame, so there's enough time to think and move and adjust, and this is just requires a bit more faster reactions and more monitoring. But the principle could be used as well. I mean, if we look at an uptrend here, for instance, so we start to fib this first spot here, right? Let's take a look at it. Oh. All right, not that I would be trading this, but when we see that the uptrend starts, we want to know what the most current fib is. All right, so we have a 61.8 bounce up to target. So we can move the fib like this. This would have been already one fib bounce here, actually at the 61.8 fib, right? That could have been a bounce trade. Then we got an acceleration to the upside. And in this case, this was very shallow. So that would have been difficult. That could have had to be a breakout in that case. We reached the target pretty quickly, so we can move the fib again. From here to here. Now, mind you, this is a good fib from this fractal to this fractal. Why? Because this was a shallow fib, but we hit the target. So it's okay to do that. And you can see that price went down to a 50 fib. Bounce at the 50. So we can move it up to the target hit, which is here, ironically, which is a bit of a smaller fib, I grant you, but technically still possible. And you can see bounce at the 61.8 fib. All right, now I wouldn't fib it to here. There's no fractal, but we could move it to here. And we have a 50 fib. Hit the target again, so we can move it again. All right, we got a 50 fib, and we move up to the target. Now here, I wouldn't move it from here to here. And does anyone know why? Let me ask you a question so that you don't fall asleep. Why would I not move it from the blue circle to the blue circle there? It was a 50 fib bounce. It could have been a good trade, and it hit one target. Okay, got a first brave answer here from Z10 double top. Ergo says no fractal. Anyone want to? Does anyone agree with both? Double top, no fractal. Z10 has another one, divergence. So we got three potential answers here already from Z10 and Ergo, or Ergo, I don't know what you prefer, but double top, no fractal, divergence. Anyone agree with any of those? Let's see which one wins. And I do appreciate the time you take to answer. And as I think it was Woody Allen famously said 80% of success is showing up. So just by being here, I really appreciate your investment that you're making with this time. Time is the most precious thing of everything, actually. Way more precious than anything else. Um, we can't save time. We can't spend time. Time only really is something we have at each moment once. So it's really invaluable. All right. Anyone else? Anyone else? So double top from here to here. Once again, this fractal to this fractal. I was just showing you. Sorry, this spot to this blue spot to this blue spot. I was just showing you how we can move right from fib to fib on this 50-minute swing high after hitting fib retracement to fib target. And we kept doing that, and every of those fibs worked well, actually, right? Beautifully. Each fib worked great. This one too. So, but the next question is, would I move it from the blue to the blue? Would that be the next fractal? No, that wasn't the question. Why wouldn't I do it? Sorry, what's the question? All right, folks, try to make a guess. I don't hold you accountable if you make a mistake here. Just take a guess. Double top, no fractal, or divergence. And to expand on that investment of time, another great person, famous person, historical figure, Benjamin Franklin, I think said that investment in knowledge pays the best interest, right? So this is a great job what you guys are doing, and girls. Some of you might be a bit more interactive. I'm still waiting here. That's the only thing. Interaction is very good, folks, because and I should do that more with these webinars. But I have a tendency to keep talking and talking, and I should ask more questions occasionally, because listening more than an hour is very difficult. It's a lot easier if there's more interaction. So I should try my best to do that more often. All right. So no one is adding anything. So, well, my opinion, fractal, definitely a good answer. Ergo, I totally agree with you. There's no fractal. So I like fractals to fractals. That's kind of the principle of this system. And it doesn't have one. Double top, I think, is something to consider. We didn't have double top, of course, when price was here. At first, we didn't have that. Here, we didn't have double top yet, right? Neither here either, because it broke it a bit. Well, we could consider that double top, but here we did. So once this happens, you might take that into consideration and say, okay, I'm moving it back down again. So that makes sense to me too, but at a later spot. Divergence is difficult to see here, I would say. Let me see. Maybe, indeed. There's a 5-minute chart, I think would be better to see that. You could say indeed that here it's topping out, right? Here we don't know how far this is going to push. But somewhere in here, where the double top happened, you can see that it's not pushing above the previous one, and you might consider that indeed a thing to weigh with. So at this spot, I would say the fractal at the blue circle, the main reason is the fractal. At the green circle, we can add double top and divergence to that list for not moving that fib. Just a bit later in time, though. All right, just make that sense. All right, so now eventually, of course, this is not going to last forever, and price is going to make a bigger trace, and you can see that price is basically challenging this bottom again, but didn't break it. So ironically, this fib is still alive, and we can use this fib again. If once it hits this target, we can refib it from here to here. All right. But ironically, the fib did survive. So anyone taking a deep fib somewhere in the 888.6 fib might have taken some profit here or be still in that trade. So that's how you can even use it on a 50-minute chart if you get really a good momentum, if you get a good push. Now let's take a look where an area where that might fail. This probably not, because that's a good trend. Okay, let me take a look at this area right here. All right, so we're in a downtrend on a 50-minute chart. We have the swing high, swing low here. Price hits the 61.8 fib and tries to get to the target. Now, we kind of missed the target a bit here, so a couple of times. So I don't think that we would move the fib to this bottom. If we did, we would have this fib in that case. Alrighty. And but would you stay in this trade if it goes sideways this long? No. Right? There's no downtrend anymore, and it's time to get out. For small profit, for small loss, for break even, whatever it is. If this trade is taken, there's no reason to stay in that. That's assuming that we did move the fib from here to here, and that's a big if, because we actually missed the target. Now, the bottom break could have been enough, perhaps, you might say, for a trade like that. In that case, we would have had the fib here, and we still missed the target. So we would be waiting for deeper fibs like this, these three, and those would have been okay trades, but prices went sideways, and we would have had to get out after a day or two. So, 1 day, max 2 days. So that's 24. That's how many candles? That's 196 candles. So this is after 1 day, and I think that would have been more than enough already to exit right there. That's a whole day of price action going sideways. So you don't want to stay in a fib trade on a 50-minute chart. That takes more than that. Doesn't make sense. Fib trades on a 50-minute chart, we're looking for fast continuation, not a continuation after 1 day. So anyone who put the fib from here to here or from here to here would be really out of that trade for break even. Or didn't move the fib, then you wouldn't be in that trade. Alrighty, now this could be dangerous right here because we see a downtrend and we might be placing a fib from here to here, right? Because we got a good alligator. So this is a spot where we could lose money. Absolutely. Because we would be waiting for a fib, we might trade these deeper fibs, but price just makes a small dip here of about very little pips, 38, 30. But the point is, it doesn't even make a break or low. So in this case, that could be a loss. If you use a trail stop, then you might be able to reduce the risk by using these fractals, right? That could help reduce the loss to a small loss. Especially, of course, if you see that the moving averages are aligned again, that might be a smart thing to do, right? And you have to be a bit more flexible on a 50-minute chart if you use this. It's a very aggressive tactic. It's a very, it's more risky than a 4-hour fib. So if just the fact that it was down here, if it takes too long and if the alligator is already up here, then there's not really much to say about that downtrade. The market exit could even be worth it, right? And in fact, if the alligator's up, we might even start fibbing the other way around. Right? Now, you could use a filter and say, okay, I'm going to only, I don't know why I can't. There we go. I'm only going to fib on a 50-minute chart in the same direction as the 4-hour trend. So you might skip this upside this upside fib because it's maybe in a downtrend. So you might not use this as a trading opportunity. So let's skip that one, right? But so you can use the 4-hour trend and only fib, or the 1-hour trend and only fib in the direction of that trend on a 50-minute chart. So this is a zone where you can lose money, and you got to be careful with that. Why? Because you can see we have up, we have down, we have up, then we have down, and we have up. So if it switches like this often, you don't want to lose too much there. You could lose a bit because you'll make that up with hopefully with the trending area, but not too much. You want to keep those losses short and small, because that's what can happen on a 50-minute chart. So then you get the good upside, then you get a good downside, and then you get a good upside, and that does offer, as we see, some good opportunities. Eke Mode, it's definitely recorded, and we're gonna post the webinar on YouTube. So you can find us on if you go to YouTube channel, youtube.com, and go to the channel of Admiral Markets. You just search for Admiral Markets, you'll find the channel. If that were to be difficult in any way to find the YouTube channel, it should be uploaded by later today. Then you can send me an email and I'll just send you the link. That's also fine. Does anyone else have any other questions regarding using the fib for Fractal? So the fib is a great tool, but sometimes difficult to use. When do you use it? When? And basically the Alligator and Fractals are just tools to help you know when and where, which direction to use it, when to move it. They're just supportive tools for those fibs. That's basically the summary of this combination. Any questions? Oh, look at that. Pound already breaking. You see, that's one of the reasons why I didn't like trading it until I got clear momentum. Because either one way or the other way. Because to me, it seemed like resistance, but look at that. The momentum's still pushing it further. All right, the dollar yen seems to be bouncing again. So hopefully this trade of mine is going to work out. It will be a great R2R, 11-1. So I'm really keeping my fingers crossed for this one. Let's see. Euro dollar, I still hope for a pullback. Alrighty. By the way, we got tonight Nenet's webinar on range bars. It's a dynamic channel system he's going to talk about. 4 p.m. GMT time. Tomorrow we're going to take a look at trading indicators. We're going to review some various indicators, and we're going to take a look at the pros and cons. So not of indicators, but of different types of indicators and different specific indicators. So that's tomorrow, also 4 p.m. GMT time. Pound dollar, I think, is not in a trend at the moment. I think it's in a wedge, and I think it's a mixed, it's a triangle. We have a triangle support here. We have triangle resistance here. Within that triangle, we had momentum down, momentum up, momentum down, momentum up. So depending on the momentum, when the price was doing this, I still favored the downside break because of the weekly chart, to be honest. But yesterday's momentum, in my opinion, made the strategic kind of analysis change. And the reason is because this is not an ABC, this is a very strong C wave. And as I said, it could be a 1, 2, 3, 4 instead. Another reason was, look at the daily. If this is strong resistance, look at this daily momentum. Resistance and support is always vulnerable to be broken if you're facing opposition of a strong momentum candle. This is a strong momentum candle. This daily candle is strong momentum. So breaking that high is something I was worried about. And although I found the resistance to be beautiful, and I really like that resistance zone, and yesterday, actually, I was saying, if this breaks, there's a good breakout trade to the upside, but even better would be a downside trade from here. I said that. But that was yesterday when we didn't have this information yet. Due to that strength, due to the massive push, the idea of shorting in the resistance zone became less attractive. And I changed that idea from shorting into waiting for impulse, waiting for a new momentum, either down or up. So yesterday's breakout trade was great, right? But the bounce trade changed. I wanted to wait more for more information. I didn't like the trade the upside because it was at strong resistance. So due to the power of this momentum, the resistance is still here. The resistance is strong, triangle, fibs, but that momentum, I thought, made it too dangerous to trade in the downside direction without momentum. And now you can see why. I didn't want to trade it upside either, just because we were at strong resistance. So for me, it was a neutral zone, and there's nothing wrong with neutral zones. Now we have a potential breakout. This is not a breakout candle as yet, from my perspective at least. I'd like to see another candle above it, after which I would look for a bull flag on a lower time frame, like a 50-minute chart, and a continuation. And there could be some extra push today. But let's see. I need first another hour breakout candle, and maybe we will not get it. Maybe we'll get a downside candle and a downside candle, and it could still be something like this. This could be a false breakout. That's why I want to see the next hour what happens. Do we get a push above this purple line at 146.60, or do we have a bearish candle and do we fail to break? If that makes sense. If it doesn't, I would say just skip the pound for today. Alrighty, folks. Well, thank you so much for being here. As I said, it's always a pleasure to have you here, and we'll be back tonight, tomorrow, next week, etc., with many more webinars. So hope to see you then, and wish you all fantastic trading. Cheers, everyone.